Imagine, just for a second, a financial ecosystem that kicked off as this highly speculative, incredibly vulnerable Wild West. I mean, almost totally lawless. And yet somehow it engineered its way into a secure, mature landscape. Well, welcome to this explainer. Today we are diving deep into the absolute fascinating transformation of the cryptocurrency space.
And to really understand this massive shift, we're unpacking some brilliant insights from Ethan J. Monroe's book, Resilience Rising: Safeguarding Crypto's Future. Monroe's work perfectly unravels how the crypto community faced those devastating early rug pulls and scams, and, instead of just collapsing under the weight of it all, they actually innovated to protect their users.
So, here's our roadmap for today. We'll start with the Wild West of crypto, move into transparency and independent audits, then the rise of decentralized governance, strengthening investor protections, regulation and ethical oversight, and finally, wrap up with a collaborative, resilient future. All right, let's jump right into Section 1, the Wild West of crypto, focusing on vulnerability and ignorance. You see, back in the early 2010s, developers and investors were totally blinded by the allure of quick wealth in what was essentially an entirely unregulated environment. But then, by 2016, reality hit hard. We saw the massive DAO hack, which drained an astonishing $50 million. I mean, that forced a really harsh realization of the network's vulnerabilities. But here's the thing, that extreme pain, it actually sparked a tech renaissance in the 2020s with things like multi-sig and audits, completely setting the stage for the global regulatory collaboration we're seeing emerge as we approach 2025.
Which brings us to Section 2, Transparency and Independent Audits. It became incredibly clear pretty quickly that operating in the shadows was the root of the whole problem. To survive, projects realized they had to step out into the spotlight. They adopted these radical open book policies, actually publishing their exact fund allocations and proving their development progress. So honesty wasn't just a best practice anymore. It became an absolute prerequisite for establishing a trustworthy environment.
From the ashes of those early exploits, a completely new standard of security was born. Projects started bringing in independent blockchain auditors to rigorously stress test complex smart contracts. They launched bug bounty programs, literally paying ethical white-hat hackers to find flaws before the bad guys could. They even adopted end-to-end encryption and multi-signature wallets. Honestly, think of it like a nuclear launch sequence. A single rogue founder can't just run off with the funds anymore, because it requires multiple authorized keys turned at the exact same time to approve a transaction.
Okay, let's move on to Section 3, the rise of decentralized governance.
Think about the sheer danger of a single point of failure. In a centralized system, one bad actor can just abandon a project and vanish with the treasury, right? But with token voting mechanisms, governance is totally democratized. Suddenly, every single token holder gets a voice in proposing and evaluating a project's trajectory. By crowdsourcing that oversight, the community effectively built a collective safeguard that actively deters malicious behavior right from the top down. If you find this analysis valuable, please like and subscribe to Knowledge Lighthouse to help us bring more truths to light. Now let's dive into Section 4, Strengthening Investor Protections. So how do we protect the actual funds? Well, the first line of defense is always knowledge. By learning to really dissect white papers, investors figured out how to spot glaring red flags. We're talking promises of completely unrealistic returns, a lack of transparent communication from teams, no independent smart contract audits, or heavily centralized token control. The community basically stopped blindly throwing money at these schemes and started prioritizing deep, critical due diligence to stop fraud in its tracks before it even starts.
And then came what is arguably the ultimate technical antidote: escrow and vesting. In the past, scammers relied on pocketing all the investor money on day one. But now, a trusted third party, or a smart contract, holds the funds securely in escrow, and they're only released, or vested, in small increments to developers as predefined project milestones are achieved. So if the founders stop working, the money just stops flowing. It's a system that brilliantly aligns the financial incentives of creators directly with the safety of the investors.
Next up is Section 5, Regulation and Ethical Oversight. As the industry absolutely ballooned, global regulators stepped in. They started pushing for strict Know Your Customer, or KYC, identity verification, and anti-money laundering frameworks to stop illicit activities. They also pushed for regulatory sandboxes for safe innovation, plus exchange security and market surveillance. But wow, did this ignite a massive ethical debate.
It really forced a collision between that original cypherpunk ethos of absolute privacy and the traditional world's demand for accountability and surveillance. It is an incredibly intense balancing act that the industry is literally still wrestling with today.
And this brings us to a really defining question. If code is law, what happens when the code actually fails? Look back at that massive 2016 DAO hack, where millions were stolen due to a loophole in the code. The community was completely torn in half over this. Do you intervene and rewrite the blockchain's history to refund the victims? Or do you protect the absolute immutability of the network and just let the hacker keep the money? It triggered a massive philosophical war that actually split the entire Ethereum network right in two.
Finally, let's look at Section 6, a collaborative, resilient future.
Surviving the Wild West was definitely not a solo mission. Projects quickly realized they had to evolve together. So they began sharing threat intelligence among each other and established self-regulatory initiatives and codes of conduct. Eventually, even international bodies and governments got involved, driving cross-border collaborations like AMLD5 and FOTF, and setting up those collaborative regulatory sandboxes to safely test innovation. It really proved that safeguarding the future requires a fully unified global response.
In his book, Monroe points out that this evolution is the ultimate testament to the ecosystem's resilience, adaptability, and determination to overcome challenges. The deep scars of early scams didn't destroy digital finance. Instead, they transformed its biggest vulnerabilities into formidable strengths. That early pain was literally translated into massive, undeniable progress.
So, I'll leave you with this provocative thought. What role will you play in shaping the ethical and secure future of decentralized finance? I really challenge you to consider your own place in this ecosystem, because your commitment to due diligence, continuous education, and active participation, that is exactly what keeps the crypto community safe and thriving.
There is nothing quite like holding a wealth of knowledge in your hands, which is why having a high-quality physical copy of these insights is so invaluable. For the complete deep dive, own the paperback. Get your high-quality paperback edition on Amazon via the link in the description. Add it to your collection today. Please share this video and check the description for more.